G'day folks, Sam Saggers here from Positive Real Estate. Thanks for taking the time to listen to me on YouTube. I hope I can further assist you in understanding some of the properties that we've been privileged to broker for our mentoring clients and our service clients over the last month. One property which we've still got a few available in relates to a property that we brokered in Whyalla. Whyalla is the second biggest city, if you like, in South Australia outside of Adelaide. And it's a very important place. It's become quite pertinent on the investing radar at the moment. In fact, the likes of experts like Terry Ryder have suggested it's a very important place for capital growth over the next couple of years. One of the reasons why Whyalla is such a strong marketplace, it actually relates to the mining boom, which is now taken off in the South Australian market. What actually happened, the South Australian marketplace was quite depressed for a long time, and some mining money through uranium mainly has come to town, so to speak, and therefore that flow and effect of the money is now hitting the Whyalla marketplace. Whyalla is very close as a service centre, if you like, to the Roxbury Downs and Olympic Dam area, and so it's probably what you could call the first port of call. It also has some other key fundamentals in the mining market, being iron ore as its other main commodity. So why we chose Whyalla was we know that the market's going to grow there. The fundamentals are there. Now, if you guys look at your property summary or synopsis of the opportunity, you'll see some further and better particulars on the mining market and why it's going from strength to strength in the Whyalla marketplace. But what I wanted to do when I went out to Whyalla, I was quite conscious of the fact that there, obviously interest rates are on the climb, and so I was quite conscious of the fact of finding a product in a growth market which has high cash flow. And I came across an opportunity which was yielding up to around 9%. Now, if you understand interest rates are around 8.5%, getting a high yield of around 9% means that you're able to more or less cash flow the property and cash flow it through a dynamic boom. So for this particular property, I targeted actually strata titled units. Now, most of the property in Whyalla was built about sort of 40, 50 years ago by BHP, and most of the housing in there is sort of older, more like housing commission housing, and it doesn't appear it doesn't appeal to the corporate market at all. And obviously with mining, the future mining of around Whyalla and mining being Whyalla being the service centre for mining, you've got a lot of corporates, from even overseas corporates, coming into town, staying for 6-12 months and needing serviced accommodation. So what we were able to put together was some strata title properties with high yields that are obviously going to ride the growth boom in the Whyalla market. Brand new strata title property starts from around $300,000 in Whyalla. So we're happy to get a property that was a little bit tired, not too bad, but in need of further and better renovation. We convinced the developers to carry out a modification of the building, and so that we can get a starting yield of around 9% and attract the corporate market. They agreed to do that, and also finance a furniture package. And so now we've got 1 and 2 bedroom strata title units which capture high yields. In the complex at the moment, to give you an example of the type of tenants that are currently renting in the particular complex, you've got police officers who've been posted out to the marketplace there, and you've got executives from companies such as One Steel who are staying on site at the apartments and are renting from anywhere from 6 to 12 months. So they're real yields. They're happening today. We thought we could add value to the yields by doing a renovation and add value to the overall complex through growth by providing a newly renovated product. So once again, you're getting some pretty decent looking units. They're going to attract the corporate market. You can probably see some outside shots there that the compound itself is well looked after, and internally you've got some very nice finished product which is going to appeal to the corporate marketplace. There's nothing else like this in Whyalla. The only other place you can more or less stay if you're a corporate is in a hotel. It isn't a serviced apartment per finance. In other words, this is a residential development. It is zone residential. It'll be financed in a residential format, and it can be managed by your local property manager. It is serviced in the way that there is furniture. So a very tidy piece of real estate. On average, to give you an idea of the numbers, you're going to it'll cost you under current interest rates on an average tax rate, it'd cost you about $2,000 per annum to service the debt on this piece of real estate. Probably around $200 a month. So not a lot of money. The upside of that, of course, is that you're exposing yourself to billions and billions of dollars of mining infrastructure. That money's come to town. Experts are suggesting that it's going to be anywhere from 15 to 20% growth over the next 12 to 18 months. So pretty good times ahead for Whyalla. How I would go about purchasing in that marketplace: buy a piece of real estate that services the debt for you, and ride the growth along the way. So pretty healthy situation all around. Property to consider. If you need any further details, make sure you call Positive Real Estate. Our telephone number is 02 9430 1100, and you can ask for John Tobin. He's our acquisitions manager, helping our clients on that particular piece of real estate. You should also have a synopsis or a property summary on the real estate, so make sure you have a look at that and look at the refined and further and better particulars. Once again, my name's Sam Saggers. Thanks for listening to me on YouTube, and I hope you have a great week. Bye.